So I'm here with Alex Robinson, the CEO and co-founder of Juniper Square, that has some big news today. I'll let you make the announcement. But I guess first, tell us what you're announcing today.
Yeah, well, it's an exciting day for us. We're announcing a $130 million Series D round, which you guys at fifthwall are a very big part of, and we can talk more about our relationship as an investor, as a customer. But it's an exciting milestone for us because we're also announcing the launch of JunieAI, which is a big, huge investment for the company, a big focus of ours going forward, is really leaning into AI. We're already a scaled fund administrator and a technology company, and we've got a unique ability to sort of bring AI into fund administration, into private markets fundraising and reporting, and JunieAI will be our platform for that. So two things we're announcing today: big Series D and new AI platform in JunieAI.
And I want to hear more about both the financing round, which I think is just an awesome milestone in your growth, and more about the AI that you're building and how that integrates into the product. But maybe just for those that aren't familiar with Juniper Square, can you give people just a bit on your background, the genesis of the company, and really how you started it all?
Yeah, so the company is now 11 years old. I started it the same year my son was born, which is not advised, starting a family and starting a company at the same time. The genesis for the company was my own experience as an LP investing into private markets really for the first time and seeing that the process was paper-based. And it blew my mind. I mean, my very first real estate investment, they asked me for my address and sent a FedEx truck out to my house, and I got a stack of subscription paperwork like this thick. I had to take it down to a notary and get it notarized. And meanwhile, I could go trade a share of Coca-Cola or Microsoft or any public stock just by clicking a few buttons. And this was 2013. And it seemed clear as day to me at the time that the private markets were already huge at that point, 10 or $20 trillion of capital in sectors like real estate, venture capital, private equity. Private credit was very nascent at that time, though growing a lot now. And so it was already this very important part of the financial ecosystem. It seemed clear that it was both going to grow in importance over time, and that investors and the market system was just going to demand the same type of technology infrastructure, the same investing experience, the same digital foundation that we'd come to take for granted in the public markets. You take for granted that you can just click some buttons to buy and sell stocks, that all of the information is available to you in a web browser, that whole very complex settlement process happens online. So we really started. Yeah, go ahead.
I'm just curious on that. Like, what's the hypothesis as to why there was this kind of anachronistic experience in private markets that was so separate and distinct from what we see with E-Trade and basically everything around liquid markets?
I think the big reason is the role the regulator plays in the public markets in enforcing standards, right? So every company reports the same way. There's an enforcement mechanism to require that. If you want to access the public markets, there's certain reporting and data sharing obligations that you have to undertake as an issuer, as a company that wants to be public. And so that then creates this central clearinghouse where all of that data, all of that information, all of the issuers, all of the investors that want to buy from the issuers can all be collected in one place, sort of metaphorically. And it's easier to build technology solutions around that, right? The different market participants can integrate with each other. You have the emergence of things like DTCC in the public markets that helps clear and settle trades. And in the private markets, you have a different dynamic. You have thousands of GPs who are private for a reason. They don't want their information public on an exchange. They are agreeing to reporting standards with their major LPs. You have very large, sophisticated LPs on the other side of the transaction, big sovereign wealth funds, pension funds, very sophisticated investors. And so you have tens of thousands of kind of different pairings where you just get a lot of heterogeneity in the market, right? And so the way that I like to think about this is, the public markets are like the federal tax code. There's like one centralized kind of way of doing things. And the private markets are like the collection of all the cities and counties and states and all the million different ways that the tax code can vary. And you need a company to come along like Intuit did with TurboTax, where you say, I'm not going to assume that the state of New York and the city and county of San Francisco are going to agree on a common tax code. I'm just going to take it for granted that it's going to vary. It's going to be heterogeneous. And our job is going to be to build a software interface that creates standardization on top of this layer of complexity and heterogeneity. And that's what we've been working towards at Juniper Square for 11 years now. We have almost 2,500 GPs as customers.
We're one of them.
You guys are a very important customer to us. And those GPs are using our software and our fund administration services to report and manage on close to 40,000 funds and north of 1 million investor positions. So each one of these pairings started out as data in a spreadsheet that we had to migrate into our system and sort of bring online. And that's the strategy that we've been building towards since founding the company in February 2014.
And how do you think about just like the impact on the economy from removing that friction? And the reason I ask the question is I experienced this very intimately, very personally. Like when I started fifthwall, I think the first close we did in our fund was like $75 million bucks of, the 3 billion that we have now. And it was so painful. The process of the documentation, the KYC, the enormous amount of friction it took to actually, start the process. Eliminating that on the GP side, the LP side, and just for the economy, what are the non-obvious benefits to the economy from removing that friction?
Yeah, I think the impact can be really profound. So, today you've got a market system in private markets with probably something like $30-40 trillion of capital collected across all these different sectors I mentioned: private equity, venture capital, commercial real estate, private credit, crypto, et cetera, other real assets. So a lot of capital where there's incredible friction to the issuers of capital and the investors finding each other in the first place, right? It's a very fragmented market. People are literally flying all around the world, hosting meetings, trying to find new investors. And I'm sure you guys have been through just the pain that is the fundraising process. So it's a little bit like, in the days before Redfin and Zillow, to find out what houses were available. Like, let's say you live in New York, you're trying to plan a move to the West Coast. Like, that was a big problem, like you really needed a real estate agent on the ground. You need to be driving around in a car, looking at different houses. And now we take for granted that you can just like set up this search parameter and be like, I'm looking for a house. This is my price range. These are my criteria, and notify me instantly the moment that something matches my criteria, comes online. And that same kind of matching and sorting algorithm that software is so very good at will come to the private markets. I think AI will be a huge accelerant to that. If you think about our customers, we've got 2,500 customers who are all doing the same thing. They have different investing strategies. Some are building buildings, some are investing in companies, some are, trading aircraft leases, whatever. But they're all trying to raise more money from investors. They're trying to find new LPs. They're trying to maintain the existing LP relationships that they have. One of the products we offer our customers is a CRM for their investor relationships. So if you think about it in the aggregate across 2,500 customers on Juniper Square is certainly the sum total of the entire market information of all of the potential investors, in private markets. And so there's a lot of work that I think software can do, especially what we're seeing now is becoming possible with AI, to really make that process of buyers and sellers finding each other in the market way more efficient. So that's one thing. A second thing would be liquidity. So like if you look at the public markets today, the secondary trading volume relative to the primary issuance volume is like many orders of magnitude, larger secondary trading volume than primary issuing volume. And in the private markets, it's almost completely the reverse. There's like no secondary at all in private markets. Like occasionally, you get a new...
Alex, even so much so, just to cut you off, because I think people might even not know intuitively what does a secondary mean in a private market. Everyone inherently understands that with respect to public markets, but like,
Yeah.
what is that? And like, why is that so high friction and why is that so opaque today?
Yeah. So when you invest in, let's just take a venture fund. Just, it kind of works the same regardless of the strategy, but a lot of people understand venture funds. So an LP who's investing, a typical venture fund is going to be a closed-end vehicle. It's going to have a defined kind of useful life, so to speak. Let's call it 10 years. It's going to have a defined investment period where the GP can be investing. Let's call that 3 years. And so what the GP is doing is they're going out and they're raising, let's say, $1 billion. They've got 3 years to invest that money, to find companies to invest in. There may be some different features like whether they can reinvest money that gets distributed and so forth. And then what they're doing from, say years 3 through 10 is sort of harvesting that portfolio, hoping it grows, taking companies public, et cetera. And then at the end of the day, ideally returning a lot more money to their investors than the investors invested. And that's the whole, name of the game in private markets investing. And what the GP needs to know is that once they've got a commitment from an LP, that the capital is certain. It's going to be there. They don't take all of that commitment up once. You have drawdowns and LPs fund capital calls. And so the GP will pull the capital down as they need it from the LP. But the trade here is the LP is stuck in that investment. Unlike the public markets, if you invest you buy a share of Coca-Cola and then you change your mind and you decide, I don't want to own Coca-Cola anymore. Next day you wake up, you can sell Coca-Cola and there's some buyer who will buy it from you at a price and you're out of Coca-Cola. Well, that's not the way it works in the private markets, by and large. Like the vast majority of the funds are closed-end vehicles. Once you invest, you're stuck there until the end of the fund's life, which might be 10 or even 15 years or longer if it kind of goes sideways, right? And so because investors are stuck in these vehicles, they demand a premium for that illiquidity. They need to be compensated for the fact they can't get their money out, right? So there's a cost of capital that the industry bears that would be really a lot lower if investors knew that there was a market for being able to sell their shares in a private markets fund if they needed to do so. And part of the reason that this doesn't exist in the private markets is because of infrastructure, technology, friction. But part of the reason it doesn't exist that's a little more subtle is that these relationships between GPs and their LPs are really deep relationships, and they really matter a lot, and they persist over many funds if the GP is successful. And they sort of like are there with each other through thick and thin. And if a deal goes sideways and a GP needs to call capital and the LP is there to fund it, they've kind of like built some trust in their relationship. And so GPs are not indifferent to who their LPs are. Like they would not be okay with, any LP coming into and out of their fund. And you also have this factor of scarcity, which is the good GPs are hard to get into. They're like a restaurant. It's like really hard to get into the good restaurants, really hard to get into the good GPs. So once an LP has an allocation in a really great GP, they don't want to do anything that's going to signal to that GP that they're not committed so they can get the allocation to the next fund. And it's come to be viewed in private markets that if you're doing secondary selling, it's sort of a negative signal and you might not get the next allocation. So there's a bunch of reasons here, but to me, these are all solvable problems. If we had an efficient market in private markets like we have in public markets, the amount of economic value that would be unlocked on a $40 trillion base of capital stock from being able to trade for dollars in a trade instead of tens of thousands of dollars in legal fees, from having liquidity, I think would be really hard to overstate. The effect would be to lower the cost of capital. And when you lower the cost of capital, more projects can get done, right? More investments pencil, more economic activity happens as a result. So I think it's, like improving market systems is sort of one of the best things that you can focus on. If you're applying technology to improve market systems, that's like a really high leverage, activity to spend your time on, which is why I've been doing it for 11 years.
It's like, I think it's one of the most powerful things to just render efficiency on this, very high friction market. And I want to ask you about kind of one of the big secular tailwinds you've been riding, which is the shift to private markets, and then in turn, what that's going to lead to when we open up all of these retail markets to private markets. But before I do, let's get to your announcement today. So you're announcing you're raising at a $1.1 billion valuation. You're raising 130 million. You're a unicorn, and you're kind of a newly minted unicorn in an age where there's not a lot of newly minted unicorns or unicorns anymore. How does that feel, and what does that mean for the company?
I mean, it's an exciting milestone for sure. It is it's like a nice validation to have these external markers from time to time of progress and how you're doing, because the journey of being an entrepreneur is your every day is filled with ups and downs, and so within the micro kind of analysis of any given day, it doesn't always feel like progress, right? It might just feel like you got kicked in the teeth that day, and then the next day the same thing. So it's nice to zoom out from time to time and see these very visible markers of progress. It feels really great to have the confidence of investors and customers like you guys, or our investors and customers like Ribbit, who led this round, and people we know and trust and have known for years now. And I really like, as I've become more experienced as an entrepreneur, I've come to really value, just like the point I was making for GPs, the relationships with investors really matter. So who the round is comprised of and how that came together, I'm especially happy about. And really what I'm excited about is the reason that we raised this round is because of the opportunity that AI presents. It is hard to overstate the transformational potential of AI, and there are many who can do it far better than me and who have, but it will transform all knowledge work, and all of the work that happens in private markets is knowledge work, right? So definitionally, everything that's happening inside of a GP is going to be transformed through AI. Even the stuff that feels like judgment is itself a form of pattern recognition and pattern matching that happens over time, that eventually our AI models will develop the capability to express. And so what we see is that at some level, this moment in time is sort of what we've spent more than a decade building toward at Juniper Square, where customer by customer, spreadsheet by spreadsheet, fund by fund, over tens of thousands of funds now, we've been onboarding customers into a unified industry data model. We've been building all these really complex industry integrations with custodians and transfer agents, and we've built payments rails, and we've built compliance rails. We've built all of these complex workflows inside of operating a fund that are really nuanced. And so we're now in this incredible position of having customer trust at real scale, thousands of customers, a sort of domain position where we have a lot of data, we have a lot of know-how, and we've built a lot of the tooling that we can now add this AI layer over the top that takes advantage of everything that we've built. It's not like it's a pivot in a new direction. It's like it turbocharges everything that we've done to date, which is why we're so excited about it and see so much transformational potential. Because one of the really hard things to get right in private markets and financial services generally is accuracy matters a lot, right? This is arithmetic. 2 + 2 always has to equal 4. And anybody that's used a lot of generative AI knows that hallucinations are very common. 2 + 2 can equal 6 or equal 1. And so this ability to fuse the precision tools and deterministic tooling that's required for financial services accuracy with the power of generative AI is something that we are, I think, in a better position than anyone else in the industry to solve for our customers and for the market. So what I'm most excited about in this round is having the capital to go really aggressively make that investment. And so we're investing in a huge way in AI, and it's really exciting.
And can you help make concrete what that means? So what the application of AI on this platform that you build, what it would mean. Let's start with for GPs. What does it concretely mean for them, and how will their business and their lives be better as a function of it?
Sure. Okay, so for a GP, let's talk about a few different areas that AI will impact them. So the first is that, there isn't a GP out there that hasn't made some significant investment in quote unquote leveraging their data, right? Oh, we got all this data. We're going to do something with it, right? We'll put it in a data warehouse, and inevitably, I talked to a lot of customers, and 9 times out of 10, maybe 9.5 times out of 10, these projects fail to deliver on their initial promise, right? Which is sort of turbocharging the decision making, giving the GP some edge as a result of the data that they've collected. If everybody's being really honest.
No,
right?
I'm totally with you. I think I think it makes for a really cute narrative, but when you actually peel back the layers on what a lot of GPs are doing, it's basically a good story for LPs.
Totally. And so one of the great challenges with that has been, a lot of the data that's valuable is locked up in email. It's locked up in documents. It's not structured in a relational table like a database. And so that's why a lot of these kind of big data warehouse projects, big data investment projects have failed in the past, is because the subset of data that's like structured that you could interrogate and get answers to, from, is a relatively limited set of the overall picture of data. And one of the things that AI is very, very good at is extracting semantic understanding from this unstructured data. So this is a huge investment that we're making. Is we have millions upon millions of documents in Juniper Square. Think every LPA, every subscription agreement, every quarterly report going back to the beginning of the fund's life. And then our customers have document repositories for documents that don't live on Juniper Square. And we're building, one of the things that JunieAI is getting really good at is the ability to extract all this information from these documents, build a semantic understanding of the content, and then use that for reasoning, use that for answering questions that the customers have. So that's one really concrete thing, is getting value from this huge corpus of unstructured but very valuable data locked up in documents, emails, that's going to inform better decision making at the GP. So that's one thing. The second thing is, one of the things that we're building are sort of agents. So the vision here is like all of the teams inside of a GP, whether it's your investor reporting team, your fundraising team, your portfolio analytics and portfolio management team, your deal teams, et cetera. They all have different work they do inside of your shop. And they all can benefit from having an agent who supports their work. And initially that starts out with relatively routine and simple tasks. So let's take investor relations as an example, right? So one of the things that you have to do as a GP, like you guys are, is like field inbound requests from LPs. They're constantly emailing you. They're asking questions. They're asking you to make changes. They're, you're in the diligence process with them. They're trying to get to know your track record better, whatever. There's just this interface to your LPs of answering questions and doing stuff for them. Well, one of the things that JunieAI provides is this umbrella, this sort of filter or this interface between all of those interactions coming at you from your LPs, and then building the responses for you, routing them to where they should go based on all the underlying source data that's in Juniper Square. And initially, this starts out as co-pilot scenarios, so it builds the response for you, gets it ready so you can just click send. But as these models get better and better, eventually you're going to see more agentic scenarios where you trust the agent to just do this for you. And in fact, we'll get to a point where you will trust the agent more than you trust an employee at the company. The reason is you can train the agent to be a PhD level expert on fifthwall, right? To know everything there is to know about fifthwall. It's just not reasonable to train a human. Some human that's been at your company 2 years to do that. So you're going to get to a point where you as a GP you rely on an agent to field investor inquiries, to help with diligence, because you trust that agent is going to represent your data better, and you're going to be in control of how that agent responds. It's going to be traceable, auditable. You're going to have governance over it. So there's a layer of what we're building, which is agents to support work around investor relations, fundraising, portfolio management, oversight of fund administration. These are core scenarios for us. And then over time, we'll bridge into things like supporting investment decisions, which are a little further afield. There's another layer down, which is all about like model orchestration. So for an agent to do something, it needs to be able to connect to workflows, right? It needs to be able to like actually issue a payment or invite an investor to a data room, or it's got to do stuff, not just answer questions in a chat interface. So there's this whole layer that's about orchestration. And then there's a foundational layer, which is all about data, documents, reasoning, understanding. And that entire collection is this big AI kind of platform investment that we're making, where our aim and our goal is to be the provider of AI solutions to GPs, not scoping ourselves to investor relations or fund administration. But once you've made you've solved these hard technology problems on like getting structured, semantic understanding out of documents, you can apply that solution to any field of work inside of the GP. There's no reason to constrain it to one team or one area.
And is it also possible, actually asking this out of curiosity as a GP and a customer, is it also possible to kind of use that AI platform to get a sense of like what other GPs do? And the reason this is top of mind for me is that, actually right now, literally right now, we are making a very big distribution from a company that went public and
congrats.
Distributing out the shares. And
that's awesome.
The ways that other GPs handle this kind of situation is a little bit mysterious to us. Yeah. We rely on what other LPs tell us, but for the most part, we're in the dark. So we've largely had to kind of rely on what our lawyers told us and what we think the market comps do. But there's a sense of like not truly knowing what our peers are doing.
Yep.
And is that something that in the future I could query on Juniper Square and understand?
Yes. Absolutely. So this is another scenario that AI is really good at. We are being very deliberately careful here. And the reason for this is there's already a big sort of new layer of trust that one needs to build around, hold on a second, how is my data being used with these models exactly? Like, we use a lot of different models in our infrastructure. So it's not like we just, use Claude or, Llama or ChatGPT or something like this. The way to think about this is that there's this constellation of hundreds of different models. Eventually it'll be tens of thousands where you have different models, different classifiers for different use cases. And one model is never going to be the singular solution. So there's a jump to get over with customers of just getting you comfortable with like, hold on a second, how is my data being used vis-a-vis these models? Is it being shared with OpenAI or is it staying firewalled within Juniper Square? It is staying firewalled within Juniper Square. And we want to make sure everybody gets comfortable with that first phase before we then bridge to this next phase, which is like, okay, wait, all of my data is because the amount of benchmarking we can do is pretty insane because you start to get all of these records and transactions and workflows happening. So in this case, I presume part of what you're asking is like, are GPs distributing shares in kind to LPs so that then they can do what they want with them? Are they selling the shares and then delivering, capital? How are they handling, tax lots and cost basis and all these types of questions, right? Well, if we have 40,000 funds and every time there's a distribution, we know whether it's an in-kind distribution or it's a cash distribution and what the, schedule of investments was that tied to that, we're in a perfect position to give you a really, really deep, thoughtful answer there. So it's actually less of a technology problem, and it's more of wanting to be really stepwise, deliberate about getting customers comfortable with how this all works. But to answer your question, yes, there will be a level of benchmarking powered by AI that makes the current kind of broadly accepted benchmarks in the industry from folks like Cambridge and others are these really limited fund vintage. Tell me what happened for the funds that were raised in 2008, and that's powerful. It's better than nothing, but these are really narrow benchmarks. When really you want to be answering questions like, all right, I'm going to do this, co-investment, and we're putting together this SPV, and like, what are market terms for how GPs are feeing on this kind of thing?
Right. And one of the things we've tried to assess is how LPs actually make sense of all the disparate terms that are in funds. And, oftentimes you get into negotiations with an LP and they say, oh, well, we don't pay fees like that. And then we'll talk to our peers and we think they do. And we kind of, end up in these situations where it's kind of just like a game of chicken, ultimately, assuming you want the commitment. How do LPs benefit from more transparency here? Like, give me some examples of just how an LP would benefit from the full application of this AI layer on Juniper Square.
Yeah, so our vision here is that GPs will have agents that LPs interact with. And the GPs will always be in control of those agents, over what the agents can do, when to escalate, what the boundaries of kind of knowledge they're allowed to convey to LPs are. So the GPs will always stay in control. But our vision here is that eventually we're going to get to a point where there's an element of trust building in the human relationship that has to take place between GP and LP. Somebody's going to want to go to dinner with you, Brendan. They're going to want to look you in the eye. You're going to want to build a human relationship. That's not going away. And if anything, that'll become even more important. But then all the other work of getting to know fifth wall for an investment, diving into your track record, looking at your deals, assessing your performance, all of that is going to be better served by an LP's agent talking to your agent as the GP, and them doing that work and that information exchange and building a consensus viewpoint on the key questions the LP is trying to ask. And that's going to be something like the LP can kick off and go to bed and is done in the morning when they come back. And so we think this is, this sort of like agent interface and this sort of way of exchanging information, finding consensus, reaching agreement, obviously is going to impact every industry, every corner of knowledge work. But what we're focused is, well, what does this mean in terms of the GP LP relationship? So just very concretely, LPs will have an agent that they can interact with, a fifth wall agent, to ask it all kinds of questions, and it will be infinitely patient, infinitely cheerful. And the way I think about this in our business, for example, is today we have customers, we have a big complex product, right? It's 11 years old, it does a lot of stuff. And we've been investing $40, $50 million a year in R&D for a long time now into that product. Customers want to interrogate it. They want to be like, will it support this? Can it do that? How does it handle this thing? And right now, there's a huge constraint, which is we need to schedule a live demo with one of our solutions engineering experts so the customer can ask all of these questions. And then there's this tiny little window of time where the customer has to, well, imagine that we've got this agent that is infinitely knowledgeable about Juniper Square. It knows all of the product capabilities. It can demonstrate every corner, every feature, every workflow of the product with infinite patience at pennies on the dollar, pennies per hour. And the customer can satisfy to their heart's content any curiosity they have about Juniper Square as part of the purchase process of whether to buy our technology and services or not. Same thing will happen for GPs and LPs. Yeah. And so that's like one example.
I think one of the other things that would be, incredibly cool would be just understanding like the spot pricing in given markets. Like one of the challenges that I think everyone in venture is now seeing is this kind of deterioration of TVPI into DPI, right? Yeah. And the rate of deterioration, at least from what I hear amongst LPs, is unprecedented market-wide. And so the challenge is everyone's marks are lagging versus where your marks are. You intimately know your portfolio, but the rest of the industry is a quarter or 2 quarters behind. And basically in that daylight is all the critical decision-making as to how you're performing. And if you could collapse that timeline, I think LPs in particular, but I think also GPs would find an enormous amount of value in that.
Yeah. So tighter timelines, and then also things like, what if analysis, right? So that's really powerful on the GP side, right?
What's an example of that?
Okay. So, in your guys' business, you're often less in control. I mean, you can sell your position on Juniper Square in the secondary market if you want, but at some level, you're kind of like waiting for the company to have an IPO to get the bulk of your liquidity. And you can influence that process, but you're not in control of it. But if you're like a real estate investor and you own a building and you're considering whether to sell that building now or whether to refi it and put more debt on the building and do a distribution of a return of capital to investors, and you're trying to answer questions like, how would this affect DPI, or how would this affect yield, or how would this affect the expected IRR over the life of the fund? These types of questions are pretty hard to answer today because it requires all this knowledge of all the underlying assets and leverage on the assets, and you have to build it through the whole fund structure. And then to actually answer the question of how it would impact different LPs and their returns, you have to understand the side letters and the economic structure of how the cash flows roll to different LPs. And so that type of what if analysis of, should I sell this asset? Should I hold it? Should I refi this asset? Should I hold it? Or for the LP, when do I expect the next capital call from this manager based on all prior capital calls and the pattern of not just this manager, but every other manager like them on Juniper Square, let's say. That sort of what if analysis to help people plan better, we think is a big sort of scenario planning is a big opportunity area that'll unlock a lot of value.
And I'm curious your perspective on this question. It's kind of a philosophical one, which is, what's the line at which certain asset management jobs start to get replaced? And the reason I asked the question is I think there was a Mark Andreessen interview that I listened to where he was talking about how, AI is going to at least put at risk nearly every knowledge-based job. But then when the question was posed back to him, well, what about your job? Are you going to be out of work based on AI? He was very quick to, of course, say, well, no, there's investment judgment and
taste. Yeah.
And of course, I like to think the same thing.
Yeah.
But what I don't know is how true that is. And I actually feel like you, Alex, are in a really unique position to know the contours and the gradations of like where we think AI could start to encroach on people like myself and the whole asset management industry and the dynamics around that. Like, what do you think around that?
Yeah. Well, I think it's both true that in the fullness of time, all knowledge work is at risk. Even stuff you think of as taste and judgment. Because everything, our brains are Bayesian active inference machines, right? Like we learn the same way our AIs learn. We match patterns, we learn data.
So 20 years from now, we don't need to even do this interview. We can just have our respective AIs
agents do it
on our behalf.
Yeah. My agent will talk to your agent. So there's not much that is in the realm of pattern matching. You can argue about whether new idea generation is something that is unique to humans or whether is something that AIs are going to be able to do as well. Like can ideas be generated in sort of these recursive loops up and down, information compression, which is sort of what these AIs are doing, or like are our brains holographic computers and, like looking at the brain as a collection of neurons, 86 billion neurons firing is like totally the wrong way to look at it. And we're really actually, embodied brains in the universe. And, like there's really deep kind of philosophical questions in there that you don't have to answer to say, well, within the realm of knowledge work that is pattern matching, which is all knowledge work, basically, eventually AIs will do all that work and do it better than humans do. So that's true. A second thing that's true, though, is that like at Juniper Square, for an example, we are seeing tremendous, software engineering is one of the first places that AI is having a huge impact. And we are seeing, it's not everywhere, it's not all at once, but we are seeing these pockets of truly transformational potential of AI helping us write code. So it's taking our existing engineers and by our current estimates, making them about 30% more productive. But we see the potential for 3 to 5x type productivity over the next few years as we roll this out through the fleet and everybody adopts it. So you say, oh my gosh, your engineers are like 30% more productive or going to build 3 to 5 times more stuff. Surely you're going to have like a third of the size of the engineering team, right? And the answer is no, we're hiring engineers. And we're hiring engineers because now that our engineers can do more stuff, think about all we just talked about. Scenario planning. What if your agent talking to your LP's agent, making the fundraising process easier. All of a sudden, now there's more work to do. And so we actually invest in doing more work. And the value of any one of our engineers is just 10x, let's say, in terms of their productivity. So that's called Jevons paradox, that as the price of something goes down, you actually consume more of it. And that's very true in software engineering, where we've had this huge constraint on the availability and the supply of software engineers. So there's far less software in the world than should exist. And so that's also true, that like in the medium term, what I try to tell our teams is this is not a battle of humans versus AI. It is a battle of humans with AI against humans who don't have AI. And you need to be a company that's full of humans with AI. And this is true for GPs too, right? It's the same story will play out for GPs. Those GPs who really get it, who embrace AI, who change the way they work, to change the way they make decisions, change the way they, get stuff done with AI, and those who are stuck doing things the old way. And that's the actual battle that's playing out. And it turns out that those who adopt the AI can do a lot more work, and therefore they do, they want to create more value, so they do more work.
And the work that you do is, I think, separate and distinct and higher value. Because the question you mentioned earlier, which is almost like a kind of epistemological conundrum of like whether creativity is actually inductive or deductive. It doesn't really matter, but I think what we probably know is that machines will always be better at pattern recognition.
Yes.
So there's some line of where you will just never be able to beat a machine at pattern recognition.
That's right.
And that is some part of what we do at Fifth Wall, and every investor does. But what I would argue the real value is more creative. It has to be ideation. And if I could focus more of my team and my team's time and all of our investors' time on ideation, not simply pattern recognition, or even lower than that, kind of customer service, the kind of rote automated tasks that we all have to do in underwriting or engaging with LPs, what higher return on equity could you possibly get than pushing people into that part of their mind? So I totally agree with you. I was just kind of curious because everyone is wondering what that line is, and you're really at the front lines of bringing AI to this core intersection. One of the things, Alex, I also want to ask you about is you've, I think, had the benefit of a massive secular tailwind in capital markets, the shift from public liquid markets to privates. And that is unprecedented and I think very well documented and well discussed. How does where Juniper Square sits today with this benefit of AI now benefit from the last frontier of retail capital that is now coming to private markets? And can you connect that story for us?
Yeah. So, I mean, it's a great question. So half of the growth that's coming to, so almost everybody expects private markets to double over the next decade. And why is that? It's because that's where the opportunity is, right? Like if you're a public markets manager, good luck beating the S&P, over a 3-year plus time horizon, right? The data says that 90+% of the time you're going to fail. And so the opportunity for active management, for finding alpha, for, creating value for shareholders, it's just easier in the private markets. That's where the opportunity is. Companies are staying private longer, et cetera, et cetera. Regulation creates the non-bank lending opportunity of private credit and so forth. Everybody expects the private markets are going to double over the next decade, and half of that growth is driven by a new type of investor in the individual retail investor who previously did not have access to private markets, now gaining access. And we do think this is going to have really profound impacts for GPs. And it's as simple as understanding that retail investors are going to expect the same type of investing experience from private markets GPs that they get from the public markets. That's the simple thing to understand. And then you unpack it and you say, well, what does that mean? Well, they're used to real-time data, right? Like I log into my brokerage account and I see the prices as of this minute, right? We have managers in our portfolio who mark their assets like once a year. Once per year, you get an update on asset value. That's very different from real time. And there's a whole operational practice of change that
or if it's venture, you marked it like 2 years ago.
Yeah, it's totally whenever the last fundraising was, or who knows, right? You marked it in 2021 at 150 times revenue or something. So it'll be more real time, right? There'll be more transparency than GPs are used to, because that's what the public markets have, come to expect. So around things like fees, right, which haven't always been the most public in the private markets.
And liquidity, I imagine, too.
Liquidity is a huge issue. This is all of the fundraising success to date. The vast majority of it has been in these, registered evergreen vehicles that have, very significant liquidity mechanisms. And a lot of the big issuers like Blackstone have had to do a lot of work to really backstop and prove that, that liquidity is there when you need it. It's really hard, depending on your investing strategy, to provide liquidity. So that's a big challenge for managers. And then another one is just many managers have built their businesses on gathering a few dozen checks of a few $100 million each. And when you have a few dozen relationships, every one of those things can be hand rolled. You don't need systems. You can just keep a list in your email inbox of who your investors are. If you're moving to a model where you're gathering $10,000 checks, $25,000 checks, you're going to have tens of thousands, hundreds of thousands of investors, which means you're going to need technology to manage your investor relationships and to do it at scale. And so we are really like how we're positioned as a company to help our GPs, our customers, because our message to them is you need to be in a position to be able to raise capital through any channel. Retail direct, retail through intermediaries like the wirehouses and the broker-dealers and the RIAs, insurance companies, sovereign wealth funds, pension plans, public and private. And so you need to be able to fundraise in an omni-channel way, and you need to be able to have your business model be indifferent to where the opportunity is. So if the opportunity skates to needing to raise, $10,000, $25,000 checks, you've got the tooling and the infrastructure and the system and the reporting integrations and everything to do that. If the opportunity is with insurance companies in, credit type instruments, you want to be able to support that. So our story for GPs is, look, you need a single partner that can help you future-proof your business. Whether we're talking about AI, whether we're talking about different types of fund structures, whether we're talking about where the capital of the future will come from. And that company has to be one that really understands technology and how to apply it and is really, really deep in the private markets and understands that nuance, and that you can trust them. Have they been around long enough? Have they, do they have the stripes on their shoulders that they've earned from a decade plus in our case of serving customers? So we're really excited about our customers are investing a lot in the retail and kind of wealth channel, and we're excited to support them.
It's interesting. I'd never heard the term omnichannel applied to fundraising for GPs, but it makes sense because it's analogous to exactly what we thought of as omnichannel in retail, which is you have just a broad audience of customers that's going to be ever changing. Costs of capital are going to be fluctuating constantly. But to your point, if you can provide the kind of frictionless transparency, the costs of capital should all roughly equalize in the market, right? And as that shift happens, you're effectively making all privates liquid and transparent in the same way that the publics are.
That's right.
And that would be a profound change, right, in capital markets. I mean, that has broad implications on just workforce productivity and capital productivity. So just massive opportunity. And maybe that's another good transition into you just raised this round. Where do you go from here? Like what's next for Juniper Square? I know you're really excited about kind of AI and you're really excited about this retail angle, but like what else should we be thinking about, in your future?
Yeah, well, we have made investments over the last 18 months in really becoming a global company. We acquired a fund administrator in Luxembourg, and we're now set up to do business in Luxembourg, cleared with regulatory approval, Juniper Square Luxembourg. So you can expect us to continue expanding our global footprint to more jurisdictions where our customers want to place funds, and also to the pockets around the world of global talent, whether that's in fund accounting, software engineering. And so we'll be expanding on those two vectors globally. The second is what we've already talked about. We're making this huge investment in AI. And a big part of our focus is on how do we really, we're in a unique position to really transform fund administration. Fund administration is this very, very big category. Almost every GP does it. It's a market that's $50, $100 billion in TAM, depending on kind of how you size it. And no one has really taken a tech forward approach to fund administration yet. It is still a largely human capital driven business. And our angle and our whole approach is to recognize that the humans are very important. They're not going away. Your CFO wants to pick up the phone and call our controller and know that there's an expert on the other end of the line who knows them, who knows their funds, who's an expert on fifth wall. That's not going away, right? So service really matters. But holding that service and human interface constant, almost all of the work that happens in fund administration should be done by computers. Almost all of it. And then you should just have these turbocharged humans riding on top. So that's a huge multi-year investment that we're making to really rebuild fund administration from the ground up in an AI first way. So we'll continue to invest there, to invest globally. And then our vision is to support all of the work inside of the GP. Right? So we started in investor relations as a technology provider. We became a services provider, expanding into the fund administration footprint. But you can look, we want to be your most important partner. Full stop.
Basically, it's the operating system.
The operating system.
Right.
And so whether that's things like transfer agency, whether that's things like, better supporting your needs around tax and compliance and audit, whether that's better supporting your needs around making good investment decisions and due diligence, kind of any area of work inside of the GP, we want to have services, technology, and solutions to support you. And we think that there's both consolidation happening within GPs, right? Lots of GPs buying each other, getting bigger. Retail is a big part of what's driving that. And there'll also be consolidation in the industry providers. You're going to want a handful of really scaled providers that you can trust. They're going to solve all your needs. And that's a big area of focus for us.
Last question, which is maybe more of a philosophical, far-reaching one. But yeah. You talked a lot about this, this future state, this idyllic future state of capital markets where there's scale, there's transparency, there's automation, there is liquidity. And obviously behind that is, these tidal waves of capital that are coming in private markets and now coming in retail. And in many ways, you can kind of think about Juniper Square as mediating all of that, right? You're kind of enmeshed in all of that. And so when you think back on like a 20 years out and capital markets are far more efficient than they are today, I think we can all agree that's a good thing for the world and for humanity.
Yeah.
What's the role that Juniper Square played in that? What was the hand that you played in making capital markets more efficient, and why does that matter?
I think that the way that I like to think about this is if you are a seller, like let's say you and I want to go into business and we got some cool sunglasses and we want to just like sell our sunglasses online. We're going to become an Amazon seller, right? And we've got this really cool idea, which is these amazing sunglasses. And, creativity is scarce and we came up with them and they're awesome and customers are going to love them. But then we, just like every other provider, need an entire global infrastructure of logistics, warehousing, delivery, payments rails, e-commerce infrastructure. We need the consumers collected in one place to sell to. And so we're not going to try and go do that ourselves. That would be insane, right? We're going to turn to Amazon and we're going to use their infrastructure and we're going to take our good ideas and plug it into their infrastructure. And what I want Juniper Square to be is the Amazon for private markets, where the good ideas, the thing that's really scarce, are folks like you. It's like, you guys are the NBA basketball stars, the people that have good judgment, that can pick great companies, that can do great things with real estate, that can, underwrite good credit. That is a scarce supply in the world. People who are creative, who have good judgment, and who can create great risk-adjusted returns over time predictably for their investors. Those are superstars, And so we want to empower more of those superstars. We want to make it easier for them to get plugged into the global infrastructure of capital. And we want it to be that all you have to worry about is coming up with the idea for the sunglasses, coming up with the idea for what company to invest in next, how to do it. And then all of that infrastructure of how do you plug in, because like one of the things that I envision and I want us to play a role in creating is there should be low cost, machine driven, diversified, tax efficient, multi-manager fund of funds in private markets. Like my sister's a dentist, she's kind of a smart investor and astute. And she's like, you're in private markets. How do I, can I invest with any of the managers? And it's like, okay.
Let's get her into fifth wall.
Let's get her into fifth wall. But it's like, if you're a dentist, like how many single manager positions should you really be taking, right?
Yeah.
Like you should be investing in the, QQQ or the, S&P 500, the Spider, the whatever. And that's going to take a lot of infrastructure. It's going to take scale. It's going to take, coming up with liquidity solutions. And there will be some managers that go it alone and they can do it themselves. Apollo, Blackstone, these KKR. But that will be the top 0.1% of managers. Mark Rowan's on record saying they spent $1 billion over 3 years building out their wealth distribution team. Most GPs are not in a position to spend $1 billion on distribution. So what about everybody else? There's tens of thousands of really great investors out there. How do we empower them? How do we provide the connected infrastructure for them to hook up into global capital, where all they have to worry about is the investing, and we take care of everything else? And that's the vision. That's the vision that we're working toward. It's a big job. There'll be plenty for us to do 20 years from now, whether AI has fully taken over or not. But it's one that keeps me going every day, and we're really excited about.
Well, I think a lot of people are rooting for you. A lot of GPs are rooting for you. A lot of LPs are rooting for you. We're obviously rooting for you, both emotionally, but also financially now, as well. And
good to have that alignment, right?
Exactly. So yeah, I just think it's awesome what you've built. I think Juniper Square is such an amazing business with such a big vision, and obviously so well timed. And congrats on this, massive round. And we are so excited to be partners.
Yeah. Well, thank you for having me on, Brendan. And thank you, most importantly, for trusting us with your business. And we really value our relationship with you as a customer. And then, of course, also trusting us with your capital, or your LP's capital. And we will make sure we're a good steward of it. And we're one of many, I'm sure, that will hopefully help you deliver great returns. Yeah.
All right. Thanks, Alex.
Okay. Take care.